Hey members, how you doing? Another Friday night weekend video edition here. On the road yet again this weekend, so I wanted to get this out on Friday before I hit the road tomorrow. So really crazy week this week in the markets. Christmas Eve had a huge down day. Markets closed Tuesday for Christmas, opened back up Wednesday, and just scream higher. Huge up day. Thursday started off way lower, then scream higher into close. Then today, compared to all the other days, was pretty boring. Got you know closed kind of weak. Ended up closing pretty flattish, the major indexes, after being up quite a bit, but overall a pretty flat day, especially compared to the rest of the week. So here's the open portfolio updated for today's close. You can see year-to-date return about 8%. I think the S&P 500 year-to-date is down around 8%. So on a relative basis, nice outperformance. I don't like to pin myself or always compare myself to an index because I always want to get to maximize the return, my return as much as possible. It's been a tough last few months though, so I'm end of the year is a good time to look back and reflect. I don't like to reflect necessarily on the outcome of each individual trade. I like to reflect more on, did I manage it well? Was my entry well thought? My exit? Was I disciplined in the trade? So overall, throughout the year, I had a few that have got away from me. A couple lately took a little bit larger losses than I should have. But overall, especially the last 3 months, I think I've done pretty well. Like I said, kind of just protecting capital. Took advantage of some short ETF positions to kind of help balance out a lot of positions getting stopped out for losses. So was able to hang in there, with heavy cash mixing in those short ETFs. So was able to close out the year. Well, it's not closed yet, but one day left on a fairly positive note. So I'm looking forward to next year. It's a continual process. Always got to improve and, get more comfortable with your methodology. Continue to work on the mental aspect, which is, as important or more important than looking at charts and entries and exits. Mental aspect is huge. So it's a continual process. Looking forward to learning more next year and looking forward to getting better with all of you. So opened a couple new trades this week, so I'm going to go over those charts. We'll start off. Here's the chart. Been highlighting the last few months, really. S&P 500, or you could substitute any major index. They all kind of look similar. Have this MACD rolling over here. So we had it in 2000, 2008, a couple smaller ones here, 2011, 15, and then now we have this aggressive cross. So we also broke this uptrend line from the 2009 lows. So what does this tell me? This tells me here to be cautious. When we've had this monthly MACD cross before, it's always been meaningful. It's meant at some times, like in 2000, 2008, that we've had some pretty meaningful corrections. Other times, it just meant the market's going to go nowhere for some time. Even in 2011 here, this little cross till it crossed back up, markets were flat. 15 here, we had this cross till it crossed back up there. Markets were flat for 12 to 18 months. So like I said, at a minimum, it means, to be cautious. This tells me that the longer term trend looks to be rolling over. You can see it in the shorter term charts. We're well below the 200-day now, is declining, well below that. Lots of overhead resistance. So, that's why you'll see in my portfolio a couple of these core positions now. This QID has been in there for a while. SH, RWM, these are all short index ETFs that I've held for some time, for some of them QID especially. But I'll look to take advantage. If the markets start trending down, I'll hang on to those as kind of core positions to ride with the trend until that trend reverses. Then I'll reverse my positions. But that doesn't mean I'm not going to take longs. We took a few new longs in the last few weeks. Some have worked, some have not. I'll trade each chart on its own merit, but it's good to be aware of the overall market conditions. And here, this is telling me to be fairly cautious. So that means if I do take new long positions, maybe I'm not going to do the full size, maybe a little tighter stops. Just make sure that before I'm entering the trade, it's well thought. I have my stop area well thought. Just be a little bit more disciplined than usual, which you should always be disciplined, but you don't necessarily have the rising tide of the market necessarily on each trade like we've had here for the last few years. So just something to point out. Even this value line, this is the value line geometric index. not as popular. It's not, considered a major index by many. It's if you Google it, you can kind of see how it's calculated. It's kind of neat. But we had here, the high in 98 around this 515 level. Hit that in 2007, couldn't crack it. Again in 14-15, couldn't crack it. Finally, last year we broke out above it, but now look, it looks like a big failed breakout there. We're down well below that level, down to 469. Broke this trend line. MACD rolling over, so not a very pretty look for this one either. So we'll see what happens as always. But right now, it looks to me like this longer term trend in the markets is, even though we had a nice bounce this week, still looks like it's pointing down to me. Again, I could change my mind, but right now that's what I'm seeing. So let's look at my open positions. Here's QID. This is one I added to my position today. So I added a half size position today right here. I'm reflecting it separate from my original position there. You can see here's my original one, 1017, up about 26%. Here's the new one I added today, 40 shares, entered at 48.44. So why did I enter it today? Well, it has this level here around $46 or so. That was resistance here in the end of October, resistance here in November. Broke above it, had that nice run. Now it came back to retest it, and it retested it successfully. It bounced off this level today. So that's what triggered my entry at the end of the day. So my stop's a little bit below this yellow box, but I like this one. I think the trend, you can see the overall trend looks to be reversing. It's going down here, lower lows, lower highs. Came up here, made a higher high and a higher low. So it looks to me like the trend is reversing, and we have a tradable spot right here above this $46 level or so. So I entered another half position here in QID at the end of the day. Cigna, this is the one that took the place of ERSX due to their acquisition. It looks okay. I'm not crazy. I'm not quite sure how to handle this one, to be completely honest, but what I'm looking for is to have it run. If it gets up here in the 200 or so level, you can see that might be overhead here from October, November. I'm probably going to exit it if we get a run there. It had this nice bounce here. You can see this yellow level here, so that's why I held at 180 or so. That was resistance, turned support, undercut it just slightly, and had that nice aggressive bounce. So I like that bounce. We'll see if it has any follow through next week, and if it does follow through the 200 or so level, I'll look to exit that one for what would end up being a very small gain here. My stop right now is I just raised it up today. I'm going to have to update the sheet. I don't think I updated it there, but I raised it up a bit, I think to about 180 or so, just to make sure that this one doesn't get away from us, and I'll use a hard stop there in CI. RWM, short small caps, you can see, had a down week this week with the markets going up, but again, like QID, look at how strong this one's been to the upside. So the trend here, you just look at this chart from September on, this is in a nice uptrend. So I'm going to try to ride that uptrend as much as possible. We might have to give some back along the way, but that's kind of my thought with this kind of trade is this is a trending trade, and the trend is up. Sure, it's going to have some down moves here, but I'm going to hang on to this one and see what happens. If it does get down to this 44 or so level, kind of like QID, I might look to re-add here. But for what it is now, I like this. It looks good. No action required stops in place, so we'll see if it could work. EXC, not crazy about the action here this week. This is a really strong looking chart above this 44.50 level. Took the nice bounce there, nice move up, undercut it, almost got stopped out. I will say now my stop here in EXC, I moved it. It's a hard stop now at 43.60. So if it gets to 43.60 or below, I am going to get stopped out of this position. Right now, it's hanging in there right around, right under 45. So what I'd like to see next week is to reestablish itself, above that yellow box. If it can do that, I think it could work out quite nicely. If not, if it moves down $1 or so, I'll be out of it for a small loss. But looks like it looks fairly strong, still in an uptrend. Not crazy about the action this week, so we'll see if it can get going next week. JPM. This is one I talked about last weekend. It's a different kind of trade, but this is a different kind of market than we've had the last year or so. So this JPM has this level around $94. that was resistance going back here to 2017. You can see it hit it a few times, acted as resistance. And then now, it just last week, it came back below that, slightly undercut it, and moved back above it. So that's what triggered my entry. But then we have this level right here around $102 that acted as, support. It was resistance here back in late 17. Support level here, resistance turn support, classical technical analysis back this summer, again, support again in October. So that's a big level here, 102. So if we can get up, close to that level around $100, I'm going to exit this position. So you can see here, JPM, my swing is about $100 there. So if we get there, I'll exit the position. My stop right now is just under the lows. I'll look to raise that up a bit next week, most likely. If it can move up slightly, I'll probably raise my stop to, around break even or just under. But I'm really looking to have this move up another couple bucks to book some profit. So again, this is just, the areas are defined. I know what I'm getting into in this trade. It's not a trending trade here. I'm not going to, sell typically in a trending stock. I like to book half for profits and then let the other half or so ride with, or another portion of it ride with the trend. Here, I don't want to ride with the trend. The trend's not up, but I do have some levels to trade off of. So I'm going to try to take advantage of those and have a profitable trade. So it's up slightly. We'll see what happens next week on that one. SH, similar to the other inverse ETF, this is the short S&P 500. You can see since the October, just a really strong uptrend. So I'm just going to ride this trend here in SH. As I mentioned, I think the major indexes look to be reversing the trend, so this is a way to take advantage of that. If they break, if it breaks below this $30 level in SH, I might look to liquidate some. Definitely, if it breaks below 28 or 29, that would negate this trade. So I wouldn't want any part of this, and maybe the markets would start turning back up. But that's a long way to go. This is a really strong move here from October on. Nice big gain there, some consolidation, really big up move there. So trends tend to stay in place typically. So that's what I'm going after here, riding SH with the trend. No action needed, anytime soon. Unlikely. Stops are in place, hard stop. So if it moves against me, I will exit. Cron. This is a new entry yesterday. So this has this area here around 950 or so. Just recently, you can zoom out and see it was important going back here to earlier in the year as well. Just under $10. But if you just look at it here, a lot of shares traded in this area, acted as support all these times, turned resistance here in November, broke back above it in December, retested successfully. That's what triggered my entry. So I'm looking here, maybe we can get a run, back to the 1220 or so would be a nice place to maybe book some swing gains here in Cron. But if it holds above that 950 or so area, which is where my stop is, 945, I like the look of this. I think it's in a nice uptrend here since August to kind of just been chopping around here, but it held this key level, so hopefully it can come back to test those highs and we can make some money on this one. Loco. Entered this one today. Really like the look of this. Here's a look at the daily chart. You can see it kind of broke this downtrend line. It's closed just above it, I guess. If it depends how you draw it. Different people draw those a little different, but it broke out of that downtrend line. And then more importantly to me is it held this level here. So that's what kind of got me interested. Then it broke the downtrend line. So that's what triggered my trade. So the level here, it's around 1430 or so. That's a big one. And if I go back on the weekly chart, zoom out a little bit, this level or slightly higher has been really important for a long time. That's going back to the beginning of 2016. You can see how it acted as resistance all these times, broke above it here, kind of consolidated right into that zone, and now it's starting to move up again. So I really like the look of Loco here. My stop is not too far below, and I entered a 5% size here in Loco, 170 shares. Stop is 1390, so just below that last week's lows. So we'll see if this one can get a run next week. I really like the look of it. I like how it lines up in the longer term. time frame in the shorter term, breaking out of this little bull flag type pattern. So we'll see what happens. I like the look of Loco here. So those are all the open positions. Now let's look at some opportunities I'm looking at for next week. Got to thank CJ for this one. He texted me about this one today, said it looks like something I'd like, and he was right. It is VNDA. Kind of similar to Loco. It has this level here. Recently, I like a horizontal level, as you know. I always like to trade against a horizontal level. This one, is $25 or so. Was resistance here and here, had that huge breakout, came back down, came just under that level, now it reestablished itself above that. So I like the look of this one above this $25 level. And I think if I were to enter this one, I'd target for swing gains, maybe somewhere in here, maybe around $30 or so by those highs from a couple weeks back, which would give, a nice 15 to 20% gain if it was fortunate enough to get there. So that's VNDA. That is definitely on my list for next week. Thank you, CJ. A couple more here. TCEHY. This one kind of a transition type trade. I like how it's there's this level here that it respected this. We'll call it $38 or so. I'll zoom in a bit. It was support here in September, turned resistance here, broke above it, came back, respected that level, and is trading just above that. So I think if it can stay above that, I think this one might be good for a push up. The 200 days up there, that's a good 15% above current price. A more conservative target would maybe be this $42 level or so, which is a 7% gain from today's closing price. So one that's on my radar for next week. So watching that one to see how it trades. FN, another long idea here. This one's held up really well as the markets have been, so volatile and overall going down. But this one, again, this has this horizontal level, $49 was resistance here. Nice breakout, just kind of been trading right just over that, hasn't really decided which way it wants to go. Today had a nice day, kind of established itself above that level. So this is one I'm kind of watching to see if it can move up maybe another dollar or two, or if more conservatively you want to see it make those all-time highs there around $54, $55. I think this one is definitely worth my attention for to consider for a long trade. So that's one I'm watching next week. Apple, I kind of talked about this one last weekend. Level I was watching here was $150. You could see it was support here and here, bounced off of it strong. Right here, I don't think I'd go ahead and buy it right now at 156, but if it kind of has a slight pullback and starts moving up again to kind of establish maybe a higher low, I think this one is worth consideration for a long. But again, it's in a downtrend. You can see an intermediate term downtrend, I guess we'll call it. But since October, it just had a huge down move. It was down over almost 40%, 35% from October to those lows. So, it's moving down. You could see the 50-day crossing the 200-day starting to curve down. So it's not in an uptrend. So again, this is like JPM. If I were to enter this one, I would define my levels a little bit more. Maybe I'd book partial profits, around here, around $164, where those lows were in April and May. You can see them right there, 162 to 164 for a conservative target. And then, all these shares traded up here, around 175 to 180. That's probably where I would exit the rest of the trade if price was starting to turn down when it hit that level. So just an idea for next week. We'll see how the markets are trading, how Apple's looking, but that's one that I'm continuing to watch. Here's one that I've been watching for a while, and I kind of like the look of it, but it needs a little bit more work. It's Keys, KEYS, horizontal level I'm watching here. If it could break above, you can see here this, 60, a little under $63 was resistance here. Kind of moved above it slightly in October. Resistance there at the beginning of December. So if it can break above that, I like this one quite a bit for a long. So I'm going to go ahead right now and set my alert here just over $63. so it'll email me when that happens. But that's one I like. Here's another kind of trend transition trade, kind of like TC EHY, and I talked about this one last week as well. It's VOD. It broke this downtrend line from the spring. Horizontal level I'm watching here is just under $20. Still needs some work to do before it gets above that. But if it does get above that, I would consider going long this name for a trade. Maybe it hits those recent highs for a swing target around 2160 or so. Maybe moving up to the 200-day for a longer term target. But again, it's a nice setup for a trade. If it's below those lows there, 1880 or so, I wouldn't want to own it. That's where my stop would be. So the levels are defined. It's in a downtrend, but it looks like that trend may be changing, at least in the near term. So one that we can maybe take advantage of that change. This one's been on my list for a while. It's holding up well. Doesn't look actionable right now, but I like how it held this $33 level here. You can see it was resistance here, broke above it, turned support. So that would be where our stop would be, is just underneath that. And you can see, in a pretty nice uptrend here, all 2008, just kind of consolidating. So what am I looking for here to trigger the entry? I would like to see a move, another $1 or $2 higher, maybe above that 35, 36 level, which would kind of break if you do a downtrend line here, to kind of break above that, maybe a little bit higher. But that would get my attention here in AJRD. I think this one maybe needs a little bit more time, maybe a bit more consolidation. And if it breaks above that line and above the horizontal level there around $36 or so, this one would get my attention for a long. A couple more here, and these are short ETFs. This is one was able to make some money on in the last couple months. This is the short semiconductor ETF, and I'm going to pull up SMH real quick here and take a look at that. So this is the semiconductor ETF, and you can see it's had a nice move off the bottom here the last couple of weeks, but look what's happened. It's running into some potential resistance here around $89. That was the support here, and here, and it kind of turned back against that level today. So that's what got my attention for this one. You can see this is not the cleanest kind of triangle type look, but it's bounced off the top side of that, and it started moving back up. So if it can clear here, if I zoom in a bit, the horizontal level here to trigger the trade would be, I like it above this, $14 or so. I think that's a key level. You can see it closed there in, on November 12th. That's where it closed. It closed just right around there these days. Closed there. So that's been a big price, around $14. So if it can creep up above $14, I like this one for a long. Last one here. This has a similar look to a lot of the other short ETFs. This is FAZ Financial Bear ETF. Maybe it needs to come down a bit. This is just like the QID trade that I triggered today. It had this huge run. Now it's coming back to retest this area here around 1250. That was resistance there briefly before just rocketing above it. Now it's coming back down. You can see today closed well off the lows. But if this one starts, retest that level, or even from here, if it just starts moving up, this might trigger a long trade for me to kind of take advantage of some of that weakness in some spots in the market. And again, with these these 3x or 2x ETFs, my size would likely be smaller, probably 5% max, more, or even a half size like I entered today in QID. But I never want to risk, it's 0.5% of my portfolio on a trade is what I typically would risk, never more than 1%. So those have to be factored into, what your stop level is going to be and what your size is going to be when determining the position size. So if you have any questions about that ever, just feel free to shoot me an email. I'm happy to kind of explain how I handle that. But at the end of the day, when you determine what your stop's going to be and what percent loss that would give your position, I don't want that to exceed 0.5%. and never more than 1%. So again, just email me if you have any questions about that, or just about position sizing in general, or anything really. That's what CJ and I are here for. We appreciate all your memberships, and we want to help each other learn as much as possible, and hopefully make some money together. So hopefully you guys have a good weekend. Appreciate your membership, and we'll be back next week. Thank you.